IVM.
BQ Big Decisions, the Bloomberg Quint podcast that helps you make the right financial choices. Hi, thanks for tuning in. This is BQ Big Decisions and I'm Alex Matthew. How much do you like gold? And how do you look at it? Do you treat it as an investment or as something to wear? Or something simply to buy to keep your family happy? Here's something that you probably didn't know. Nearly 4 billion years ago, meteorites from outer space struck the Earth and deposited the gold that mankind has for centuries extracted and hoarded. But the amount that we have found in over 4,000 years is surprisingly small. Some theorize that if you were to collect all of the gold that was ever mined, it would only fill up a little over 3 Olympic-sized swimming pools. And it is that scarcity that makes it so valuable. From ancient Egypt to ancient Greece, and more importantly, ancient India, gold has universally been the foremost measure of an individual's wealth. Even today, during important festivals, Indians follow their ancestors and head out to buy gold to invite Goddess Lakshmi into their homes. But mythology and tradition aside, how much gold should you own? And in today's context, can it still be considered a wealth creator? My guest today, Gautam Kalia, the head of investment solutions at Sharekhan, has the answers. Thanks for joining us, Gautam.
Hi, Alex. Thank you for having me.
Absolutely. Did you know that we had only about 3 Olympic-sized swimming pools worth of gold in the world?
No, I'm surprised. I thought we had more.
Well, just looking around you, you'd think that we had more, right? But I would think that Bapida has a significant portion of that gold, right?
Maybe one of the swimming pools belongs to him.
Well, he wears all of that. No, but getting down to the major point here and narrowing it down to just financial planning and good financial planning, leaving aside tradition and myths and all of that, how do you treat gold as part of your portfolio?
So gold is an important part of your portfolio. What I would say is that what makes it so attractive is the fact that it's a good hedge against inflation. And that's something that you hear about a lot. It's basically your friend when all the other asset classes are not doing well, when the news flow is terrible. So it's something to make sure to have in your portfolio when all your other investments are showing in the red. This is something which will probably be showing in the green, so or the black in this case, right? So that's why it's really important to have an allocation to gold.
So that is why they call it a safe haven. We'll get to that in a short while. But from the perspective of planning your portfolio, and that would include all sorts of assets. Ideally, if you're talking about a good, healthy portfolio, that would include equity, a little bit of debt, and possibly some gold as well. What percentage of your portfolio should ideally be in gold?
I would say about 10% is what you should have in gold because it's a good tool to diversify. Because gold is not really something you invest in for high returns. Right. It's something to protect your portfolio. So it's a very good hedge against factors that are beyond your control, factors that influence politics, wars, those kind of issues that we read about in the papers.
So especially if you're a long-term investor and you're worried that your savings over a period of 7, 8, 9 years is going to get eroded a little bit or is going to get hurt by whatever's happening around you, you invest a little more into gold.
Yes, because it's inherently a store of value and it basically keeps in pace with inflation. So you are able to, at least that portion of your portfolio is a good hedge against rising cost of living. So that's why it makes sense. And some people also, like to use it as jewelry.
No, I was getting to that. That's a very important point, Gautam, because we go out, and I mentioned this at the start, right? You have an important festival, you have an auspicious day, and the popular perception is that you must go out and buy some gold. And usually what happens is that you go to the store and buy some jewelry. The question is, can that be treated as an investment?
So there are two schools of thought here, and one school of thought is obviously that that's for own use,
right.
That's for decorative purposes, things like that. So it's really not an investment, especially because of the kind of cost involved in buying jewelry. Because
you're talking about the making cost.
Exactly. So it's you're paying maybe 20-30% over the price of the precious metal,
yes.
And then sometimes semi precious stones are involved in
right.
which don't really give that kind of return.
Correct.
So yes, so one school of thought is that it's jewelry is not an investment because you basically step out of the shop and you've lost a lot of value.
So for example, if you were to put that into simple terms, assuming that I got a piece of jewelry which is authentic here for 100 rupees, I should assume that if I was to look at it as an investment, and if the making charges were 20%, when I stepped out of the store, if I were to try to sell it back, it would be worth about 80 rupees.
Exactly.
So I would have to wait for a significant amount of time for that 80 rupees to come back to 100 rupees. Right. To recover the cost.
Right.
And then I'd wait for a little more time for the value to go even higher, for it to be an investment, right?
Exactly. Or the second school of thought is that you say that you've actually made an investment in gold for 80 rupees. And that 20 rupees is something that you spent on shopping, right? Because that 20 rupees is something that you're actually consuming, which is the making charge. So if you account for it in your portfolio as 80 rupees instead of 100, that's when you can treat it as an investment, especially if you are viewing it as an investment plus a consumption commodity.
Sure.
And some people, with the kind of investment that they have in jewelry, with the kind of gold that they hold in their lockers, it is I would feel that it's criminal not to consider it as part of your portfolio.
So it is an asset for sure.
Yes, definitely.
But my question here, Gautam, and very quickly to make this point, is that when you buy jewelry, you're not looking to sell it at a later date. You use it most often. You wear it and you probably look good in it. You give it to your kids and you use it to buy more jewelry. But very rarely do you go out and sell that jewelry.
Alex, you're right. There's a lot of emotional investment in any piece of jewelry.
Right.
But they are increasingly a larger number of people, maybe because of the influence of hip-hop or whatever. I can't really put my finger on it. But who want to stay on point, on trend, and they go remake that jewelry. Right? So that is a part of consuming that asset. But if you have, let's say, if you have a total portfolio of 100 rupees, out of which 60 rupees is in equity and 30 rupees is in debt, and you got 10 rupees in gold coins.
Yeah.
But then you have 200 rupees in jewelry.
Right.
Separately.
So you can't ignore that
exactly,
as the point that you're making.
Exactly. Because then you have an asset allocation already, which is significantly higher than you need it to be.
Fair enough. Okay. So that's one school of thought, or rather the two schools of thought with regard to jewelry.
Yes.
But I understand that a lot of financial planners out there would say, hey, look, buy jewelry, be happy about the jewelry that you buy, but don't treat it as an investment. Of course, on a rainy day, any asset that you have can be considered to be useful. But if you're going out to buy it as an investment, then go and buy out in different forms.
Yes.
What are these different forms that are available?
Sure. So if you're looking at gold purely from the point of an investment, then you're looking at investing in gold mutual funds, gold exchange traded funds. You're looking at sovereign gold bonds, which the banks offer now thanks to government policies. And you can even look at physical gold, which is again a very common way of investing and holding gold.
You can buy gold coins and rings and all that kind of stuff,
exactly.
Which doesn't really involve much of a making charge.
Precisely. So you get gold coins which are certified, and you can. Most people just buy those and put them in lockers and.
Absolutely. So it's a great store of wealth, but. The point is, the other three that you mentioned, if you were to just talk about them a little more in detail, let's talk about gold ETFs first.
Sure. So gold ETFs are basically provide you immense liquidity. There is a very low cost of holding because you're not really holding the physical gold, and you can trade in them anytime during market hours. So you can exit and get access to cash almost immediately. So that's fantastic.
So
as an
perhaps
option.
the most liquid, as they say, the easiest to buy and sell.
Exactly. You have gold mutual funds, which take about a day or two for you to encash. But those options are also there. They're slightly more expensive to hold on to. But again, you're not holding on to physical gold. And the third is obviously the sovereign gold bonds. And those actually give you a return because you are making an investment in a bank. You're buying that bond and you're getting a return of maybe 2.5% on an annualized basis. And then at the end of the period, you are actually getting the value of gold at that time. So your investment is linked to the gold price as well as getting that coupon. So that again is a very attractive form of investing.
And it was in fact started by the government with a view to weaning Indians off buying physical gold.
Precisely.
Right? Because as a lot of our listeners will probably be aware, one of the major imports of India as a country is gold. And we're one of the largest, if not the largest, consumers of gold in the world.
Precisely. And obviously then you sidestep all the issues regarding buying physical gold, because then you're not really sure about the quality. You need to make sure that you are holding it in a safe, secure place.
Yes.
The chances of theft or losing that then reduce significantly.
The same old concept of dematerialization, right? It came down to your share certificates at one point of time,
Precisely.
long time back. Now you hold it in an electronic form.
Yes, that's a good analogy, Alex.
All right. So we've talked about the various forms that you can buy gold in, but how should one view the recent rise in prices? There are lots of things that are happening around the globe that have contributed to this recent rise, but
so, Alex, actually, gold price has gone up by 10% over the last 1 year, and we expect it to go up by another 5% over the next 1 year. And the reason why this has happened is primarily because we see a weakening of the US economy and expectation that the central bank in the US will be cutting rates. So that rate cut is really driving the momentum towards gold investors and gold price.
Right.
That's the key reason. Followed by the potential trade war escalating between US and China, and obviously the tension between US and Iran. So these are the key factors that have led to the gold price rise. And you see a lot of central banks also buying gold. They are adding to their holdings in gold across the world. In fact, as of last year, it was the highest amount of gold bought to date by central banks globally.
Okay.
So that's really what is driving the price of gold up.
So, but the bottom line is, Gautam, that anytime that things look a little bleak, when the equity markets are not doing particularly well, when there is uncertainty with regard to trade and how things are going to pan out with regard to an economy, people turn to gold because it's a storehouse of wealth, right? But that is when you see the prices going up. How should you treat that in terms of when? Should you time your purchases based on how you see the prices?
So I don't think we should be timing our purchases. I think gold is something, actually we shouldn't be timing any of our purchases in any asset class. I'm of the firm belief that you should invest in asset classes gradually and build your portfolio as and when you are your savings allow you to do that. Because someone listening to this podcast is going to think about investing in gold today. But the point is that gold has already gone up by 10%, right? So you really can't get your timing right on such things. So important is to gradually build your allocation and make sure that you have up to 20%. You can have around 10%
but
allocation.
That 20% includes jewelry as well.
Yes. So typically you should have about 10% exposure, because the higher exposure you have to gold, the lesser the overall return you can expect from your portfolio. Because gold historically hasn't given a very high return.
How much? Just to put things...
So it's inflation linked. If you look at the long-term return of gold, it's around 4 to 5% annualized. And that is also a very generous estimate,
yes.
Depending on which time period you're looking at. So, 5 years back, it was maybe 11 $1,100 to an ounce. Now it's $1,400. And obviously we are talking after the 10% hike.
And of course, it goes to those levels and comes back down. So it doesn't keep rising over a period of time.
Right. So it's not really a straight line, though it is significantly less volatile than other asset classes. So the ups and downs, the volatility that you experience as an investor is much lower in gold.
And if you were to put that in context and talk about equity as a comparison?
Yeah, so I think the best example to view gold investment is, and why it's important in your portfolio, is 2008, 2009, when the markets were down 30+%, and gold was up 25%.
Correct.
Right? So that really tells you why gold is important in your portfolio. When you're bleeding red everywhere, this is something that will help prop you up.
So it's as opposed to equity, which is your fair weather friend, it is something that you go to.
Exactly. It's your friend in need.
Absolutely. All right. A very quick question at the end of this conversation. We're done talking about gold, but just want to quickly ask you, if you don't like gold and if you still want to invest in a precious metal or in something that is similar to that, is there any option available to you?
I don't think there's any other asset class that has been able to demonstrate the intrinsic value, the qualities that gold has in terms of keeping pace with inflation over such a long period of time. You could look at silver, could look at diamonds, but those investments are much more volatile.
Sure.
Silver has a much more industrial use. So I would probably say silver is your closest replica. But if someone doesn't like gold, I'm assuming he doesn't like silver either. So if you're off commodities altogether, then you could probably look at debt.
Okay.
I think you're probably better off investing there then.
Fair enough. All right. So that covers most of the bases with regard to gold as an asset class. The bottom line is that it's really a storehouse of wealth and not a wealth creator. So don't allocate a large portion of your portfolio towards gold. Thanks so much for joining us on this conversation, Gautam, and helping our listeners out.
Thanks, Alex. Thanks for having me here.
Absolutely. And to all of you who've joined in and listened in to this conversation, do let us know what you think in the comment section below. And don't forget to share. Watch the space for a lot more in the realm of personal finance. Thanks so much for listening. This is Bloomberg Quint.
If you enjoyed Big Decisions, check out some other podcasts on the IVM Podcast Network. You can check out Paisa Vaisa, hosted by Anupam Gupta, Advertising is Dead, hosted by Varun Dugirala, the Ronnie Screwwala podcast, hosted by Ronnie Screwwala, or Cyrus Says, hosted by Cyrus Procha. These shows are available on the IVM Podcast website, app, or wherever you get your podcasts from.
Do you have a night routine? Well, everyone has one. And the to-do list usually looks like this. Brush your teeth, set that alarm, get into your pajamas, and switch off those screens. But here's one more to add to that list. Tune into the Positively Unlimited podcast for a dose of positive action and tips on how to build powerful mindsets. Episodes out every Monday on the IVM Podcast app, ivmpodcast.com, or wherever you tune into podcasts.
Every week comes a show where three people come together to tell you about stuff they like. A movie, a TV show, a book, and other stuff. Tune in every Monday on the IVM Podcast app to IVM Likes. Batman approves this message. Thank you, Batman.